Hi, folks, and welcome. My name is Micah Livanos with Marcon Benefits Group. I'm the Vice President of Sales. Thanks for joining us today. It's amazing how many people don't know that there are different types of group medical insurance. Typically, what we find is when we are meeting with clients or prospective clients, they're only familiar with maybe one of the three major types. So today we're going to talk about those three major types and what kind of benefits, pros, and cons you might have with the different ones. So what most people are familiar with is the fully insured health plan. When you sit down with your broker, every year at renewal, they typically say to you something like, hey, unfortunately we got a 15% rate increase this year. You lost about 10 doctors in your network, 3 hospitals, but I've searched everywhere and I can't really find much else out there. I recommend that you would just renew as is. The fully insured health plans are where there's no underwriting. You basically have a carrier that assigns rates to a geographic region or population of people, and they're based off of very simple information: the age, the gender, and the zip code. And based off of those numbers, they lump it all together and assign a risk code to it. And so whether you were talking to myself or any other agent in the area, you're going to find that those rates are going to be exactly the same. And typically, they're on the higher side. Even though those rates are obtained without any underwriting, they are fully insured, which means that there is no risk to the employer. And what that means is that whether you have $1,000 of claims that year or $100,000 of claims that year, you're pulled into a larger group of people that are not going to affect your increase that much. On the other side of the spectrum, you have your self-insured health plans, right? Now, that is typically the least expensive type of health insurance, but it has the most amount of risk. And what I mean by that is that's typically reserved for your Fortune 50 or above companies, where you take $1.5 million, you put it into an account, and then you would pay all of your own claims. Least amount of cost, but the most amount of exposure. And so that might not make a lot of sense for some of your smaller, more boutique companies or even mid-range companies. And what I mean by that is, if you were to have claims that were exceeding what you had set aside in your first month, possibly a $10,000 claim in the first month of your plan year, that could have an immensely adverse effect on your budget for the year. If you have a company of 10, 15, 20 employees and you experience a large claim in the first month, that will have an extremely adverse effect on your budget for the remainder of the year. So to kind of recap, we have your fully insured health plans on the one side of the spectrum, most expensive, no risk. On the other side of the spectrum, we have your self-insured health plans, right? Least expensive, but the most amount of risk and fluctuation. So it might not make a lot of sense for a lot of your small to mid-sized markets. And what that leaves us with is the third of those options, which is level funding. And that's the hybrid of the two plans. Level funding is the best of both worlds. What it does is it allows you to participate in all of the protection of the fully insured health plans without all of the risk or fluctuation with the self-funded health plans. So let me explain how that works very briefly. Level, in the term level funding, refers to your premium. So let's use an easy figure for math, $100,000. Let's just say that your group is predicted to spend $100,000 over the next 12-month period of time. Divide that by 12, that would be your monthly premium. And so you pay that level premium throughout that 12-month period of time. Your claims are going to fluctuate up and down. Some months there'll be low claims, others there'll be high claims, other months there'll be no claims at all. doesn't matter to you. You're paying that level premium, very similar to what we previously discussed, the fully insured health plans. At the end of the contract period is when we look back and say, okay, we predicted or projected $100,000 in claims spend. Your group spent $80,000 in claims. And so here's the catalyst. We're going to give you back 100% of the unused claims fund. Has anyone ever heard of such a thing before? Getting money back from your health insurance plan? Now, that's the likely and most probable case scenario, is you're going to spend at or under what we predicted. And I'll get into that in a moment. Let's talk about the worst case scenario, right? We predicted $100,000 in claim spend, but your group spent $120,000, $150,000, $200,000 in claims that year. What happens in that scenario? So just like the fully insured plans, we have the protection built in. There's a stop loss or a reinsurer that's going to pick up 100% of the claims in excess of what was originally predicted. So what you're left with is, like I said before, the best of both worlds. You've got the savings of the self-funded health plan on the one side, the protection of the fully insured health plans on the other side, leaving you with the hybrid level funded health plan. How do we get to that point in time? What's the exchange of value in order to obtain that type of a product? And the answer is simple. It's underwriting. Okay? With the fully insured health plans, there is no underwriting aside from a very simple census, gender, age, zip code. That's the only information they obtain. Now, previously in the self-funded world, there would be much more stringent and intense underwriting, where every individual would have to fill out a health questionnaire and fill out an extensive background so that we could accurately predict the amount of claims that were going to be spent that year. Now we have a program that uses artificial intelligence to underwrite those health applications in a very efficient and effective manner. The way you're able to obtain these types of health plans in a level funded arena is through underwriting. That is the value exchange. If I can, then will you. If I can provide a better product, a better plan, better renewals, chance for money back at the end of the contract period, would you be willing to go through an underwriting process? One extra step in order to obtain what is better in the market and do something different. The definition of insanity we know to be to continue to do the same thing and expect different results. And what we are bringing to the table is asking you to do something different to break out of that mold. So by going through that underwriting process, it enables you to see if you're a good candidate for a level funded health plan. And guess what? If you're not this year, then you might be next year. And that's part of our process is going through that with you and consulting and helping you find if you're the right candidate right now. So to learn more about what we just discussed today with level funded health plans, visit our website, www.marconbenefits.com. We look forward to hearing from you soon. Again, this is Micah. Thanks for joining.